What is going on, guys? My name is Alex, and this is the Equity Odyssey podcast. And today I have the pleasure of getting to interview Frank Rizzo. So, Frank has over 20 years of experience in the real estate space. He is the co-founder of Stone Capital Investors, the co-host of the podcast MHP Exchange, and he has acquired and repositioned over 1,500 lots in the mobile home space. So, Frank, super excited to have you.
Alex, I'm super excited to be on. Thank you. Thank you for having me on your podcast today.
Absolutely, absolutely. So, in the Equity Odyssey podcast, things we really like to dig into is your backstory, the highs, the lows, um, and the learning points, right? The key points where everything kind of shifted. So, could you give myself and the audience a little bit more backstory? I know you kind of got started in real estate around 19, but maybe take us from there.
Sure. I did get my first experience in real estate when I was 19. Not that I want to date myself, but at that point, I got my real estate license, and real estate was dramatically different. I mean, people were still going into the office to get the MLS listing book. Everything was very localized at that point. It was really before the internet took off. So I spent a year there, and then I left. I was in school, and I spent some time on Wall Street working in finance, and eventually found myself back into real estate. And I got back into real estate because my focus and my desire was really to be involved in cash flowing deals and opportunities, right? When you're in the stock market, you could either be a hero or a zero, right? Depending on which way the markets may trade. But to me, when you had an investment or you were managing investments for people and you had cash flow, you always had that opportunity for growth. And it wasn't just looking at maybe appreciation, it was looking at deals from a different vantage point. So my pathway back into real estate was really from the deal perspective. And I was working with a developer, and I was managing their office where we would find distressed properties in my local market, Staten Island, New York, and we would reposition those properties and put them back for sale. We'd find land, we'd develop the land, and eventually it led me to opening my own office where we focused on niche real estate investment opportunities. Um, Fast forward a couple of years, I quite by happenstance, I stumbled upon the mobile home park space, uh, and quite frankly, it was because of me helping somebody else find an income stream for them as they were relocating down south. In doing some homework and research, my recommendation was that I think you should, buy a mobile home park. And the only way they would do it is if I stayed in the deal with them. And 11 years later, it was the best decision I made in the real estate investing world, was to get into this space, and it's really changed the trajectory of what I do and how I do it and how we built out a team. So, I mean, that's kind of our pathway into getting into the manufactured housing space.
Awesome, awesome. But it all started with, not necessarily with the mobile homes just yet, but the real estate space started with working for a developer. Is that right?
Yeah, it started with, coming back in, working with a developer. I think, Alex, the key here was always having that entrepreneurial spirit. Even when I was, in high school,
Hmm.
I always was, either working on a business or working towards a business. And what you I find, or one of the things that I think has helped me be successful over time, and one of the things I talk to people about when I'm counseling them, when they're looking to invest in real estate, each property you buy is its own business, right? And you have to treat it as such. You have to look at it as such. You have to plan it out as such. And that kind of mindset and working with that developer, I mean, that really kind of put it into focus and help clarify what needs to be done moving forward. And I still use a lot of those, tips and tools to this day.
Awesome, awesome. Okay, I like that. And so you got into this first mobile home park deal with a client of yours. I imagine there was some, sort of, I'm glad it went well, but I'm imagining there's some sort of learning curve or lesson to learn there. Tell me a little bit more about that first deal.
So the first deal was a 91 unit park in southeast Georgia. From New York, you know, grew up in Brooklyn, operate my office out of Staten Island. So it was managing it from a distance, which was a learning curve
Hmm.
that you had to overcome. There was making sure that you could manage a project from a distance and had the right team and reporting in place to make sure that that could happen. And right now, today, with as technology has advanced, it's become easier and easier to track progress on different stages of development from a distance. But it was being able to do that. It was being able to find the team remotely and being able to create how you're going to track the things that we used to take for granted here locally, right? How you're going to track collections, how you're going to track work orders, how you're going to make sure that things are going to be done in a timely fashion. So, fortunately, we came in, there was a quasi team in place. We expanded on it. We shifted. They were operating on a park owned home model where they would rent out the homes. We took a model which for us works to this day, which was we prefer communities where residents own their homes and we own the land. So if we buy a park and we have homes that are in place, we look for ways to create a pathway to home ownership, either for the residents that are in place or for a new resident who might want to be part of that community. And that's very important for us. And we found that that creates a longevity in the resident, number one, which is a key component, but it also makes for a better community. And it gives us the opportunity to focus on things that we can focus on from a distance, such as land improvements, such as clean, beautification, such as security, but we don't have to worry about being Johnny Fix It for every single unit across the board, wondering when a carpet needs to be cleaned or a leak has to be done, where we can kind of get the resident to buy in to being a homeowner, part of an improving community.
Hmm. That is absolutely huge. I imagine when you said, you got a mobile home park deal and you just discovered all the advantages, w- were the main advantages the lower levels of management, or was it higher returns, or what had you? So, what made this first deal go so well?
So one of the things that what really intrigued me about it was, it was there was a lot of risk mitigation in that. So when you have the more units you have, even though they're not higher paying units, but the more units that you have, the less dependent you are on any one person making their payment to ensure that you're going to be able to meet your numbers inside your business plan. And I'm going to use my market for an example, and every market's a little different. But in New York City, rents are very high, right? I can have a duplex, and I could, probably get 3,000, 3,500 for a three-bedroom apartment. And so that sounds like I have two units, and if I get 7,000 a month, that's great. But if my expenses are 5,000 a month, and one person doesn't pay, I have a challenge. And to me, that's always, you're running a 50-50 bet that somebody's going to be able to make that payment. But if for that same dollar spend in New York, I can go somewhere else and I could get 90 units, right? The numbers might be smaller. They might only be paying me $400 a month, but I'd have to have a larger amount of people not fulfilling their obligations for it to impact me. So to me, one of the things that drew me here was there's a huge risk mitigation factor by having these multiple units that are paying less, right? That are paying less. And what we've found in addition to that, I mean, we are serving such a need in the economy. I mean, this is the most affordable housing stock, right, out there is manufactured housing. And in providing that in a era in a time where affordable housing is at a necessity. I mean, it's a hotbed issue for everybody. there is a strong market demand where we are. And so when you have that risk mitigation of multiple units, you have a strong demand in the macro sense, and every community where we see almost the same drivers. I mean, that to me was a recipe for success. And I'm glad we got in when we did, because over the last few years, we've seen a lot of new entrants in the space who've come to recognize what we saw back in 2013.
Gotcha. Awesome. So risk mitigation, that is huge. Okay, very good. And so on that first deal, how did you find that deal?
Oh, great question. So, I like to believe that having the experience that I've had in this space is that I'm always looking to uncover nuggets, right? So, you have your broker pool of people that you contact and you stay in contact with them.
Hmm.
And coming from that broker background, right, and being a real estate broker myself, I understand some of the touch points when I speak to another broker of how to stay on their radar and what we need to do to maintain that relationship and networking with them. So that deal in particular was a deal from a broker in the space who specialized in manufactured housing, which not many brokers do. So that's a strong that was helpful in finding that. But and I would tell any of your listeners, I know it's nice to say that we find off market deals, and we do. I mean, we have our own database that we go and do, but having a really good broker on your team or agent on your team who can find or procure deals and find and know little nuances in the markets that you're in is so key to being successful. Like, you don't have to just find, an off market deal. For those are great, but having relationships with real estate professionals can be so helpful, especially when you're starting out
Hmm.
and you don't know what you don't know, right? And so starting out like that, having that broker was extremely helpful.
Hmm. Yeah, I've always said, sometimes real estate agents get a lot of hate, but honestly, like a really good real estate agent is definitely worth their weight in gold in the things that they can, save you from and point out to you and bring to you for sure. So, yeah, that's awesome. Okay. So you got the first deal done. How did you, so, and then you kind of realize like, oh, this is awesome. Low risk, lower level of management. Where did you take it from there? Did you start reaching out to other brokers, or what was the next step?
Well, funny thing about it, Alex, was, we I got involved in this deal. I'm there. My partner and I, we're still doing deals here in our market, and expanded out from our local market to whether it was the other boroughs or nearby states. And as we're sitting there looking at different deals and opportunities, I brought up the fact that I was in the manufactured housing space. Like, and mind you, during this time, if you recall, all of a sudden around 2015, 2016, the market just started to really come out of the Great Recession. We started to see equity values rise. We started to see the market heat up again locally. So, what, as most people will do, you'll take the low hanging fruit. We were doing deals in our local markets, but there is a hurdle inside the local markets. It's tough to get scale. There's, whether it's competitively, whether it's price points, whether it's regulatory wise. So as we were sitting down and looking at what's been done, I had mentioned the fact that I'm involved in this mobile home park. Why don't we take a trip down south, and I could show you some of these parks and take a look at some other opportunities. Maybe it's something that we want to do a little bit more aggressively. This was a one-off, but maybe this is something we want to do ourselves, and kind of make this part of our portfolio. So my partner, bless him, he was crazy enough to take, a barnstorming trip with me, and we found a deal for ourselves in Jacksonville, Alabama, and we did what we did. We raised money from friends and family. We syndicated out that first deal, and we bought our first park ourselves, which was a 31 unit community in a college town of Jacksonville, Alabama, which we thought would be a great first step for us together to see if we can really fine tune this model and if it was something that we could take to the next step. I will say, like, we did certain things differently then, and we made certain mistakes there, but it turned out to be a really solid investment and really sprungboard us to, you know, 25 communities later.
Hmm.
And so we're really, really proud to be part of that. But we learned a lot of valuable lessons from that, and we continue to learn, as we continue to grow.
What were some of the mistakes or lessons learned?
So interestingly enough, Alex, on that deal, because it was the first deal we did with, again, outside capital,
Hmm.
we hired a local property manager who was highly rated in the area, one of the top, great reviews, great local area knowledge. But what we found while we were trying to take the conservative and safe route there and hiring somebody local to be our eyes and ears on the ground, what we found was they didn't really have MHP knowledge or intricate knowledge of the MHP space. So where we expected where our expectations were and what their performance was completely different. And they ended up firing us about 6 months into our engagement. They sent us a letter because as asset managers, we were, kind of drilling down on expectations and what our, key performance indicators would be, and they weren't hitting those marks. So eventually they fired us, and we had to take over management for, our first park 800 miles away with, investor capital at stake, and we had to really turn that ship around. So, they had dropped occupancy in half, and we had a bunch of vacant units, and we had to start turning this thing to making money to see if this was even worthwhile for us to stay in the business of manufactured housing. And my partner and I would take an 800-mile drive, on a Thursday, and we'd come back on a Monday until we got that ship righted, and we made it work.
Wow. So you guys just drove down there and then just started hammering stuff out.
We started showing units ourselves to make sure that we could get that community filled and occupied. And it took a little while, right? It took a little transition to get it there. But eventually it got to the point where it was one of the most stable communities that we would have. And we knew each month what it was going to do, which was great, which is why you invest in real estate in the first place, is that predictability. And it became a very solid performer for us, and something that our partners on that deal were very pleased with. So we were
Hmm.
able to turn that situation around over a period of time, and became a linchpin in the portfolio until we ended up exiting it probably in like 2022.
Awesome. Awesome. That's, I know it's always, um, it's a different thing when you have somebody else's money on the line too. So that's awesome. You drove, 800 miles, like you said, and just righted the ship. Were there things that you were doing? I guess what were the things that you were doing that previous property manager wasn't doing? Like, is there like any common mistakes?
You, one thing that you always have to understand, right, and you have to know is what's the process. And we go through that all the time. And we had a situation even here recently where your process has to evolve as your business evolves. So obviously they were highly rated. Obviously we would refer to them, they were great at what they did, but their process did not work in terms of trying to get the results of where we needed to get to, right? So one of the things that we focus on internally from that point forward is, if we're not getting our results, does our process need to change, right? Or just because it worked on this point in time, if we change something else along the way, maybe that process needs to be tweaked. Maybe the workflow needs to be changed. How can we do it that it becomes more efficient, that we can really deliver the value that we're trying to, and that we're getting that message across? So, I mean, that's something that we're constantly aware of, and organizationally we talk about, like, how do we make things better? And that was one of the key takeaways from that deal was, take a look at the process. Their process wasn't working. They weren't able to share the vision of where we wanted to take that community. We felt we could do that better ourselves. And now we run everything, Alex, as a vertically integrated operator. So, we handle the team on the ground. We do it ourselves. We don't outsource that. We oversee the projects to make sure that we're, delivering on, on time and on budget. And we can control the process. We feel that we can better control the product.
Awesome. So now all property management is in-house for,
Correct.
oh, awesome. Okay.
Correct.
Very cool. Okay. So you got those are kind of the first two deals. I guess fast forward to today, you guys are managing all your stuff in-house. I guess what else here? How did you turn this into like a more of an operation, I guess, for finding, acquiring and repositioning these homes?
So, one of the things, that's very interesting way that how you phrase that. Like, at what point this becomes, uh, like, now it's all we do, right? Where before, when we came into the space, we had other outside investments, whether it was a commercial, whether it was we were still doing some renovations, spec work. And what we've realized, that to be successful as a successful operator in this space, there's so many different nuances and so many different levers that you have to pull, that you have to be completely all in, or this industry will push you out. That's one thing we've learned about the mobile home park space, especially as it's become a little bit more, I'm going to use the word trendy, but it's become a little bit more niche. It's become a little bit more
Hmm.
popularized. This is not the type of space where, you could go in and you buy and you can forget about it, because residents own their homes and you don't have to do anything. There's still a lot of touch points that you have to maintain with your residents. There's still a lot of communication that you need to maintain with your residents, and we make sure that our people know that, hey, we're not local, but we're very hands on. We have our team there on place on the ground, that we're there. We're involved in the process of turning those communities around. And over time, as that's happened, it just became, this business just took more and more of our time. And we realized that if we wanted to make this work, Alex, we had to commit to being truly mobile home park operators. And this is now all we do. So there was some point where we realized, like, hey, this is not only are we pretty good at it, we love doing it. We have a passion for turning these communities around, and it's worked out pretty well for us. So we've been fortunate enough to say that we've been able to do it, and we've had some success in it. And so our partners and our stakeholders have allowed us to continue on this journey.
Awesome. What does your process look like today for identifying opportunities and 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 performing on them?
So one of the things, and I think, Alex, this, we just came out of a period of time where people wanted to do deals. I think some people got very aggressive,
Hmm.
and they took deals because they thought the rates were cheap, and they're like, well, I had capital that I have to deploy, and let me buy this, let me buy that, and well, maybe there's accelerated depreciation, and maybe I could buy this and do that. And I'm sure you've seen it and heard it, and that's always the wrong reason to buy, right? So I think you have to have your own, and this word gets thrown around a lot, like, what's your buy box? But you have to have your model or your discipline of how you look to generate returns for your partners, for yourself, for your investors. And what we look at is, if, regardless of what we do, if we're going to buy a community or we're going to invest in a community, I want to know that in 24 months, and we normalize it, not necessarily stabilize, but we normalize, what do those returns look like when we start year two, right? And in 24 months, I need to be generating a double digit return on invested equity. I have to, right? And if I can hit those numbers, then that works. And if I can't, then what's the number that it does work at?
Hmm.
So when the market went kind of haywire for those couple of years, we ended up being a net seller rather than a net buyer. But over the last 24 months, we have found that, well, in our market, there hasn't been, maybe it's not a distress market, but there's definitely been distress situations.
Hmm.
And by being disciplined, we're able to aggressively act when we find something that fits those parameters. And when we know that we're inside those parameters, we can be very aggressive in that buy box. But it's knowing where you want to be. What's your
Hmm.
return metrics?
So clearly defining what you're looking for, what you're going for in terms of, returns, numbers, buy box, that sort of thing. I see a lot of other people, they have that kind of figured out, they have it written down somewhere, but even when it, checks the boxes A, B, and C for them, sometimes they hesitate to pull the trigger. Do you have any advice for someone kind of struggling with that?
You, you know, you have to look at the numbers, right? I do believe that this business is a feel business. Like you get a feel if something works for you or not. But you shouldn't let fear be the deciding factor, right? If if you want to do something and you know that there's always a reason to say no. There's always a reason to say no. There's only one reason to say yes, and that's because you know that it's going to work. So you have to have that confidence in yourself that you can make it work. And if you've done your modeling correctly, and if you've done your your expectation, and it's not always going to be the way you modeled it out, but if you've looked at that and you've done your diligence correctly, and you've uncovered as much as you can, right? You're never going to uncover 100% of the issues, but the stuff that you found that you can deal with. Then at some point you've got to be able to trust your execution ability,
Hmm.
right? And that's what it comes down to. You got to trust the fact that you can execute, and if you can't, then well, you don't think you can, then you got to pause, and that's a good reason to pause.
Sure.
But then maybe you find somebody who can, right? So there's a lot of different ways to go about it, but you got to have that discipline and know why you're saying no.
Hmm. Gotcha. So you have to have that confidence that it's you're going to be able to perform, and if you don't have that confidence, then you need to either find somebody who can perform or fix that first, right? Develop those
Yeah,
skills.
yeah, absolutely. And then it's finding the right people that can perform on that. So, but it all starts with you having confidence in yourself,
Hmm.
right? And this is business. I'm not just talking about mobile home parks. Just real estate in general is a business that is not for the faint of hearted, right? It is something that will, and I'm sure you've seen it in your investing experience. There's times where you can question, like, why did I decide to go this route, right? Shouldn't Isn't there an easier route to do this? But it's working through that here and then understanding, okay, how can I take this challenge and break it down? Like, what's the first step of that challenge to get it out of the way, right? Because every journey you start with that first small step. So I think one of the things that we've done pretty well is breaking down some of the larger issues into smaller steps, making sure that we're accountable to get those steps done. And then when you can look back and say, wow, I did this, now it doesn't seem like such a big challenge anymore. And a lot of that comes with the fact that we have done it for so long that we have more confidence. And the more that you're successful, or you've had the opportunity to succeed at something, the more confidence that will give you going forward.
Hmm. Awesome. No, I think that's super powerful advice. So, um, one question I really like to ask a lot of people that I think lots of times provides a lot of insight. Um, what would you say over your career is your biggest failure and what you took from it?
So early on, early on, one of the first deals I did as a speculator,
Hmm.
and with the person who's become a very close, dear personal friend of mine, and we would buy houses and we would flip them together. And so we had purchased a home that was similar. That was in a area where I just sold. It was a duplex in an area I just sold a home for $530,000. Right. So it was very comfortable. We bought it out of an estate. This was one of the first deals that we had done together as partners. So we bought the property out of an estate. It was a big rehab job. We go in. I went with the low price contractor, not the contractor who I really wanted to go with, who was a little bit more money. So that was mistake number one, right? That was mistake number one. So we went with a contractor because we thought it was cheaper. That and I will tell you, it was a $5,000 savings. It cost us 6 months to get the job right, and an additional $35,000 to fix with this guy. So, it was that $5,000 cost us so much more. But we ended up hitting the market just before the market collapsed. All right. So I had the knowing that I just sold a house, in the 530s, the same house, a couple blocks away. Put it up at 539. We started getting offers lower than where I sold the previous home. Right. So I thought that, hey, I'm going to get my number. And then all of a sudden, the numbers, as the market got worse, the numbers got progressively worse. And then I was always chasing down the previous offer, right? Chasing down the previous, which we've all made that mistake. And we eventually sold the home, because we had to sell the home, right? When we eventually sold the home, we took something that could have been a very positive gain, even at that, and we turned it into a small loss. When you factor in holding time and cost, and part of it was not reading the tea leaves, right, of where the market was heading. Part of it was poor planning, on our part in the beginning, and trying to go with the lowest price contractor rather than the guy who was a little bit more money but had the better reputation. And then part of it was not realizing, when that first offer came in, sometimes your first offer is your best offer. So when you're in that business, sometimes you can leave a little meat on the table for somebody else, like meat on the bone for somebody else, as long as you've got that profit, that healthy profit, right? You can leave a little meat because that makes them feel like, hey, we've got something good and we're going to see you to the end. So I do take that in mind whenever we're looking at positioning our, properties. Like, not that you don't want to get not that you want to get the best offer, but hey, where are we in the cycle? What's going on? Is this a real number? What would happen if this doesn't, if we said no? Like, can we get the same thing, or what are we expecting? What's the timeline? So we look at things a little bit differently, because taking a big gain and turning it into a loss is, not fun.
Right, right. Okay. That's super interesting. I kind of smiled about the contractor thing because it's such a common, I've done it 100 times and everybody else does it. You pick the guy that you're looking at your numbers, and this guy's going to save you 5 grand, but it turns into a management nightmare, and like you said, additional money, additional time, and all that stuff. So, um,
Alex, and you'll understand this, because when you talk to your contractors, and the toughest thing in life, and real estate aside, the toughest thing in life is finding good people.
mhm,
And when you find good people, you figure out how to keep them around you for as long as you can, right? You don't get rid of good people when they're there. I'm a firm believer in that. And sometimes that means that you work with the same people, and if they're good people, they'll know, like, hey, on this job, I'm a little tighter. I need you to be as slim as possible. But there might be a job where there's a little bit more room and you can work. And that's the relationship that you really want. You can't put a price on dependability, right? To know that someone's going to be there and show up when they say they're going to show up.
mhm,
Because to your point, you could save me $5,000, but if I have to chase you for 2 months, you might cost me money in other ways. So make sure, whenever you're looking at one of those trades, it's the dependability. It's not just price, it's the dependability, the reliability, the standing by the work, and the people that you're surrounding yourselves with, which is so paramount to how successful you're going to be down the road.
totally, totally. Yeah, it's team. It's building a team. The more I grow in business and in real estate and things, I'm realizing the number one skill that I can develop is team building and investing in a team and yeah, letting them grow essentially. So, okay, awesome. Is there somebody in maybe the mobile home park space that you admire, and if so, what makes you admire them?
So one of the things that I really appreciate about the space, by far and large, uh, most of the other community owners that we've met have been very helpful
Mm,
with each other, in terms of sharing ideas or sharing vendors or things that work and best practices back and forth. One of the In that first deal in Jacksonville, Alabama, one of the community owners there was a who was a big player in that space. He sat down and he kind of gave me some insight into that market because, to your point before, there was a lot of reasons to do the deal, but there was also that concern of like, hey, should we even do this? Like, do we know what we're getting into? We're putting capital at risk, investors' capital at risk, reputations at risk to make this work. And he sat down and gave me and my partner a real good insight into the local market, what happens, you know, what you need to do to be successful there. And quite frankly, he actually, while we were away, he was we were driving down on our property manager, but he was one of the guys that called us up and said, hey, I'm at your park. You probably want to take a look at this because they're not doing, from conversations what you want to get them done, and they're not doing it at the way you'd want it to get it done. So I just want to share that with you. And he didn't have to do that, and he did.
Mm.
And I know he would probably rather remain nameless, but that's something that I stuck to me as being really above and beyond. And that's something when I speak to other community owners or potential community owners, I think that's something that you look to pay forward, right? We're trying to put out a better um, product. So if there's guys out there or people out there that are doing it and we can kind of collaborate a little bit, we look to do that as well. That's why we go to as many networking events as we possibly can to talk to other community owners, because there's no way that somebody could say they know everything, right? Um, you just don't.
Right, right. That is one thing I actually really like in general in the real estate space. I find at least is people are like kind of reaching their hand out and like teaching me at least a lot of things that they wish they would have known sooner and helping people out when you can. So I really actually do like that about the space. So it's cool to see that you've experienced that as well.
Yeah, listen, I think I'm as competitive as anyone, right?
Yeah.
If I'm doing, but at the same token, I think when you realize that if we're all trying to put out a better product, I
Mm-hmm.
mean, it just helps everybody across the board because
Right.
this space in particular, right, has gotten, it does have some bad connotations to it. You do have cities and towns that saying, hey, because of maybe the way these parks had been operated, they're trying to get away from this asset class. However, it provides such an important niche. Like, you cannot find a more affordable housing option than a manufactured home. Like,
Mm-hmm.
in one of the communities that we're in Jacksonville, North Carolina, we're able to offer a brand new home to our residents for $60,000. The average sell price of a home, median sell price of a home there is $280,000. So we're creating an affordable housing option, right, for our residents. They're happy. They're buying a home well below where they can. Their monthly payment is below what comparable rents are, but we need the community to allow us to improve the community we own, right?
Mm-hmm.
And if they don't see that, and and that only happens with community owners working together. So I mean, that's a big part of it.
Yeah, no, I agree, and I like your note there on being competitive too, because I agree. I'm competitive also, and I kind of weirdly view it. I was telling you before this, I'm in the painting contracting space too, and it's got a lot of the same stuff going on. But um, when I do better, and maybe I collaborate a little bit, somebody else does better, and we can kind of raise the standards of the space, right? And in their innovation, I can innovate off their innovation, and it makes me even better, right? So it's synergistic, it really is.
Absolutely. I mean, absolutely. I mean, we should all be pushing each other to be better.
Hmm.
And at the end of the day, that's what's important. And there's so many ways to create value that we don't have to worry about, you know, has this knowledge and who doesn't have that knowledge. So we try to kind of create a space where we can share knowledge and try to get better ourselves.
Yeah, absolutely. Awesome, awesome. Okay, Frank. Yeah, man, I really appreciate you coming on here. Is there one thing that if you had somebody listen to this, is there one thing that you hope that they walk away from this episode with?
So one thing that I would mention to anybody who's looking or interested in investing in real estate, affordable, being able to provide affordable housing solutions is going to be a key component to any real estate investor's portfolio. And they should look at ways to profit from it, to participate in it, and to provide great affordable housing options because there'll be a strong demand for that now and for the foreseeable future. And if they're interested in learning more about the mobile home park space and to see if that's the right fit for them, if they have a deal, or if they want to see, you know, how it might work for them, then they could reach us at the MHP Exchange.com. And we'll be happy to sit down, have a conversation with them if they're looking at a deal or if they're thinking about participating in mobile home park investing. We'd be happy to sit down and share with them our insights and what we see going on and if it's the right fit for them.
Awesome, awesome. I'll link that website in the description. You're a podcast host as well. Do you want to mention that and kind of what you guys talk about there?
So we have a podcast called the MHP Exchange. The MHP Exchange podcast. We talk about real estate investing through the MHP kind of space, which giving tips, tools, and knowledge on that. Also about mindset in terms of what you need to be a successful real estate investor. Obviously, using our mobile home park experience as the backdrop. So you can check us out there. I mean, we're on Spotify, iTunes, or the online platform, the mhpexchange.com. Or if you'd like to see a visual of what it really takes to turn around one of these communities, we do have a video series called Trailer Park Turnaround on YouTube, which actually you'll see us walk through these communities at different stages and what it takes when we find the community, when we're turning a community around, doing the work on the community, and a lot of great interactions and a lot of really great on the ground coverage, which is really insightful.
That's a genius idea for a YouTube series. That's so good. Awesome. I'll link that as well so everyone can go check that out. 'Cause that sounds super interesting. I know I will. So awesome, Frank. Any parting words for the audience? That's a great way to end it on.
Yeah, Alex, man, just thank you for having me on. I appreciate what you're doing. This is a great show, so thank you very much, and I look forward to hearing more from you.
Awesome. Thanks so much, Frank. And signing off, you guys.